Okay, so it took us 9 minutes to get the first entry because that first entry was a tricky entry. What happened was, actually, because of an adjusting entry in the prior, what happened was the prior period, there was an adjusting entry, which was this. Salary expense 500, salary payable 500.
Oh.
That had been done in the previous period, you see. That was so you see, that was an adjusting entry. So now you took care of it in this period. Angie, that's a tricky entry. You see what happened?
No.
You see what happened? You see in blue, Angie?
Mm-hmm.
The prior period, at the end of the period, the workers had worked for us, but they had not been paid.
Mm-hmm.
But they had worked for us.
Mm-hmm.
What's called the revenue recognition principle, there's 4 primary principles. Because of that principle, which states that revenues and expenses are recognized when they occur. Because expenses and revenues have to do with time, have to do with quando, have to do with when. So the workers worked for us and we owed them $500, but we didn't pay them. So an adjusting entry was made. In fact, that's the purpose of adjusting entries, is because of the revenue recognition principle, which deals with when do we record an expense. I had a student just the other day, I told him for a long time that, you know, he ended up getting a multiple choice test, and it said that they got the money on this date and they did the work on that date. When should they recognize the revenue? And he put down that he would recognize it when he got the money.
No, they did a court.
But that was wrong.
Okay, that they did the work. Doesn't matter if they get paid or not.
That's right, as long as it's a good receivable. So what happened, Angie, was that adjusting entry was made. The previous period. As a result of that, we had a T account, salaries payable, for 500. Now, this period, the guys worked for us for the rest of the week. The end of the period was in the middle of the week. So the guys worked for us, and we owed them another $600. So that's what that first journal entry is. I don't know if I'm making any sense at all to you. Any questions? Okay. And when you're ready to jump up there, you just tell me. And if you want to give Miss McGowie, you ready for the next entry, Angie? Read to us.
That's easy. That's easy. That's an easy.
Huh?
That's an easy one.
Got an easy one? Good. What happened the next one? Read to us.
Received 1,200 cash from customers on account.
Received 1,200 cash from customers on account. Okay, so what do we got to do now?
I have to increase my cash. I have to debit my cash 1,200.
She's going to debit her cash 1,200. Go do that. Go do the journal entry. So we're going to do journal and post now. So we could probably go pretty quick. Now let's see how she does here. That's right. You're going to increase cash 1,200. And what's the other account?
Accounts payable.
Do we owe them or do they owe us?
Oh, wait. Received cash from customers. Oh, I'm sorry. That's accounts receivables.
That's right. So account receivable increasing or decreasing?
It's decreasing.
Debit or credit?
Credit.
Correct answer. Do your journal. And now she's going to post. She journals correctly. Entry 2. Now she's going to post. She posts up from top to bottom. Always a good idea. Okay, entry 2. Now she posts up account receivable, entry 2. Okay. Try to put them to the top if you could next time, just to save space. That's okay, though. Leave it there now.
Yeah, I'm done.
Because we're going to have a couple more in there. Okay, entry 2. Next. Read to us.
Received 1,400 cash for service performed in November.
Okay, received 1,400 cash for service performed in November. Let's see if she knows. She was coming in today to do chapter 5, but she just wanted to get a little review. Let's make our journal entry, young lady. Let's see what she knows here. And we're kind of late in the season. She seems, okay, so the accounts involved are what? Okay, cash 1,400. And let's see if she knows the other account. Very good. Revenue. Post up to your T accounts. Good. That's entry number
3.
3. Okay, so go post up to your other one. You always do this. So too. Go ahead. She's doing fantastic. I don't know if we do have a sharpener.
Huh?
Down in the library, there's one. You want to go down to the library? Genesis? Good name, praise God. Okay, she posts up to her now, I'm sorry, make revenue, see the little spot under expenses? She makes a good point. See that little, see that, no, erase that. Erase that.
This,
We don't put revenue in that section there, no, that section is only for liabilities and owner's equity. But we make it in the next section. See the T account I made for you in the bottom?
yes.
No, in the bottom right-hand corner.
Okay.
That messed up looking one. You can make it prettier. Erase that
I'm
one.
just wondering, where does it go?
Yeah, it goes into, good question. We always separate them like that.
Okay, liabilities and owner's equity.
And that section is income statement items, son. So if we're doing it at home, what we do, Angie, now Angie's not exactly totally, she's separating stuff. When you're first doing it, it's good to separate them on different pieces of paper.
Okay.
All right, put your little 3 next to that revenue. We always want to have a number on that, so if it doesn't balance later, and now we got to find the problem, that way we can find the problem. Next, read to us. So we're just running through some fast entries. Let's see how fast we can do these.
Purchase of store equipment on account 3,000.
All right, bought equipment on account 3,000. Bought equipment on account 3. So what do we say to ourselves? Is I'm just going to say it as she's doing it. We say to ourselves, what's involved? Equipment's involved. Is equipment increasing or decreasing? It's increasing. Therefore, is it a debit or a credit?
How much?
And accounts payable is
That's how we think.
3,000.
Is account payable increasing or decreasing?
Increasing.
It's what?
Increasing.
Good, that's right, it's increasing. On the test, indent the account payable, they could take a point off for you. It's retarded, but, well, who am I to say? It's essentially correct. You know what I'm saying, McGowie? McGowie?
Yes.
On a test, they kind of want you to indent. Some teachers will take a point off if you don't indent the account. Okay, it's okay here today at njcampus.com. All right, 3,000 she posts correctly, and now she posts to account payable correctly. Very good. Sometimes it's a good habit to make different T accounts for account payable for different folks that we owe, but that's okay. Next.
Purchase supplies on account 500.
Purchase supplies on account.
pretty similar.
Okay, that's entry 5.
Oh.
That's okay, post it up. She posted it up first this time. That's fine. If when you're first learning, that's okay to do it that. I don't mind that way either. Some people's minds are wired to, and it can be easier. Now, a lot of sometimes accounting teachers, they'll say, oh, you know, just journal, then you could post later. Yes, if you're a CPA or you've been doing it a long time, that's your job. But for now, journal and post. Okay, so she has the correct entry. There, supplies increase 500, account payable increase 500. The debits and credits are correct. Next.
Pay creditors on account 2,500.
Paid creditors on account. That means in English, paid people we owe money to. Is account payable increasing or decreasing, McGowie?
It's decreasing.
Debit or credit?
Debit.
Correct answer. So she has actually pretty good. This is just a review for, this is what we would do at njcampus.com if you come onto the webcam service that we're going to have hopefully soon. Okay, so she's kind of just a little workout for her because she's pretty good on it. Like I said, she came in, go to the top with that because you're going to need to save space up there, okay? When you're doing it at home on paper on a test, you save a little extra space for cash. And there used to be more going in there. Okay, we'll be right back. What she posts up, now she posts up to the payable, 2,500, and we'll be right back.